Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid, passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Enlightened investors, happy to be back with you again today. I'm your host, Dr. Alan. If this is your first time tuning in, I know you'll find great value in the show. Are you perhaps a busy professional passionate about the work of your calling, but have come to realize that the hope of developing financial independence has taken a backseat to priorities of following your passion? If you can identify with this, I have good news. State Talker Capital is an investment company designed for passionate, fulfilled professionals like you to help you develop financial independence built on solid, passive real estate investments. We have created an enlightened investor circle just for you. Go to our website today and enroll in the Enlightened Investor Circle. There you'll receive education and support for your passive real estate investing goals, no matter what your level of investment experience and expertise. Our guest today is a real estate investor, syndicator, professional forex trader, and serial entrepreneur, having owned and operated 6 companies across various industries. He began his real estate investing career in the 1980s when realizing the opportunity of income-producing real estate to utilize sale-lease-back strategies to purchase real estate and operate companies. In recent years, as he watched the financial markets evolve, he determined he needed to diversify by transitioning to opportunities in multifamily properties across the United States. Please join with me in welcoming Tracy Hubbard. Tracy, before we dive into the depths of financial markets and hard assets, tell us about an experience from your formative years that helped you to be the person you are today.
Well, and thanks for having me. I appreciate it very much. I'm reminding of this mainly because my mom's told me this story several times. When I was a toddler, and she actually didn't think I could even really talk, I was able to string several words together, and it was basically in response to my older brother, he was whining about something, wanting, I don't know if it was a candy or snacks or something like that, and my mother kept telling him no, and it was in the kitchen. So she walks out of the kitchen, it's just my brother and I in there by myself, and she said, I looked at him, he said, if you give up, you won't get it. And she didn't know I could really talk a lot, and I strung those whole words together. So basically just telling him to persevere through this. So she tells that story quite a bit, and she's told it through my adult life, mainly because of the tenacity that I have and a lot of things I've done. And so that would just parlay into my experience. I am a former U.S. Marine, and that just really taught me really where and how to dig deep and just within yourself to really overcome any kind of objective you may have in front of you. One of the Marine Corps sayings is adapt and overcome, because there's lots of things that you're going to get hit with, lots of obstacles. And if you stop at that first one, then you're not going to attain or achieve any of those goals. And the Marine Corps has lots of sayings, and some of them I think are tribute to the Marine Corps, may not be there. The sayings, one of them is, if you run until you can't run, and then you walk. And then when you can't walk, you crawl. But whatever you do, you just keep moving forward. And I think that was probably Martin Luther King, but I know that our drill instructors hammered it into us going forward. And so that's been my mantra throughout my entrepreneurial life. I came out of the Marine Corps and pretty much went into business pretty quickly after that and became a serial entrepreneur. And that's what I've done in my adult life. Is I've had several different careers in several different businesses and industries. And as my kids will tell lots of their peers and stuff, and I've tried to model it for them, they say, my dad has reinvented himself many times, mainly because, what you are may not be what you need to be going forward. So I've lots of different careers and just try to always move forward and fill a void wherever I can see that. So I guess that'd be the formative stuff.
You certainly have had an interesting and a very robust life. You have some extensive experience in the global interest rate and currency markets. So if you could help me and our investors understand how global interest rates can affect cap rates and financial rates.
Yes, and I appreciate that. So I'll give you a little background on that. I'd owned several companies, like I said, and I had the grand opportunity to start over from scratch at the age of 42. It's called bankruptcy. And so we lost everything we had. And it wasn't one of these, okay, I'll just go set up down the street and it's just a bump in the road. We literally lost everything. we had all of the bells and whistles and made some mistakes along the way, obviously, but this one necessarily wasn't my fault. But hey, it's what you find yourself in. There, one of those times I had to reinvent myself. And so that's when I started going into the financial markets and trading the markets. Started off trading the commodity markets, and that was in the late 90s. And then after 9/11 and some events that happened there that sort of concerned me a little bit, I started trying to moving into more liquid markets, and currencies being the most liquid market in the world with over $3 trillion a day traded in those markets. So I started moving into the currency markets and trading currencies. And they are basically, if you think about a currency for the world, think about the dollar, the euro, the pound, yen, all that. Really what a currency is, it's like the stock of that country. That's what it represents. Now, currencies' values are driven very much so by interest rates. And I'm talking about their central bank interest rates, not primes or anything like that, but central bank interest rates. But that all flows down through to the economies that they represent. So I learned a lot about interest rates and how they affect markets in general, business in general, obviously borrowing power. And as you and we could spend a whole bunch of time talking about that because I traded the markets for over 20 years, but sort of to go fast forward where we are today, let's look at the speed bump that the economy had back in 2008 and 9. Really not a speed bump, it was a major dip, right? But that's when the Fed started getting really involved in the markets per se with the interest rates. And it's been a race to the bottom. When I say race to the bottom, I'm not talking about just US, I'm talking about all the countries of the developed countries of the world have been racing to the bottom as the interest rates to quote stimulate their economies. And a lot of them have negative rates right now, like Japan, Switzerland. There's lots of them that are there. Europe's pretty much in a negative interest rate environment. Now, everybody thinks, well, but how can I have a negative interest rate environment if I'm paying interest on a loan? Well, I'm not talking about consumer, I'm talking about borrowing power of businesses and banks in the country. When you have this cheap money, and they're doing it, quote, to stimulate the economy, to keep it going, and they're basically just trying to keep all the plates spinning. Well, and that's one reason I got out of the financial markets is just the fun and games they're playing with it right now. It's not based off anything real. It's just like looking at the markets right now. Everybody thinks they're a genius because they thought, okay, I bought Bitcoin and I've made a fortune. Now, and just go back to the things that we just saw with GameStop and just, all the things that are happening there. People make some money and all of a sudden the emotions take over and they think they're God's gift to trading or whatever. And this is going to, well, those things never end well. But that's what they've created with this cheap money economy we've got right now. So that all flows down through everything else. So what does that mean? Well, that means we can borrow money as real estate investors. They're cheap out there, very cheap. I'm getting bridge loans that are incredibly cheap. And if you roll those into permanent financing, it's extremely cheap money. What does that attract? Well, it attracts lots of buyers. And what does that do? It causes what? It causes demand. It's a pure supply and demand cycle. If you have a lot of demand on something, what's going to happen? And you don't have as much supply, what's going to happen? Well, that price is going to go up. So as interest rates go down, your prices go up, which is a direct derivative of the cap rate. We'll call it the cap rate, what your return on your money is. So those low cap rates means you're paying a lot of money because if you only have a 3.5 or 4 cap, and that means that's where your return on your money is. Well, what does that mean? It means you're paying a lot of money for your investment if that's all the return you're going to get. So what is that? That affects the cap rates directly. The interest rates do. So that's how they're directly correlated. And when people ask me, so where do you think interest rates are going? And I used to have this problem when I was not a problem, but when I used to fly a lot, back when I had a couple of small hedge funds that I was doing in the currency world, and I was traveling pretty much all over the world and doing a lot of this. And people would ask me what I did for a living, and I would tell them I traded the markets. And then they always want to know, where is this going to happen? What's going to happen here? So everybody wants a prediction so they can go home and go buy whatever that stock is, whatever it is. And I always tell them when they ask me, where's the market going? I say, I have no idea. And you don't really know. And if you say all these market predictors, they make all these predictions, well, they may be right once every 10 years. And all they got to do is be right once. And then that's all they'll ever talk about. It's like a broken clock is right twice a day. So those kind of things happen. So I don't make predictions as far as where the markets are going, where interest rates are going. I'll just tell you from the past experience I've seen, I think we're going to be in a very low interest rate environment for quite a while. And I'm talking quite a while, probably 2 or 3 years. You think of it right now, even if interest rates double, they're cheap. Those kind of things are just going to be around for a while, and that's going to keep driving hard assets, is what I would call hard assets to invest in, making them very popular. And That's sort of what I started doing back in 2016, was getting out of the financial markets. And I'm not going to get into that a whole lot, but it's just not something I want to be involved in, because when it rolls over, it's going to be massive. And people, if you don't know anything about the markets, just look at a chart of the S&P 500 or any major stock and just watch what it's tracking and what's doing. Have these massive rallies. You got to think about what drives prices up. And I don't care what it is, whatever the market is, it's usually, when it boils down to it, it's greed. Greed because people want to make money. That's what drives it up. Well, that's an emotional reaction. Really, greed is an emotion. So that's what drives prices up. Well, what makes markets crash? Fear of losing everything. So which one's a stronger emotion, fear or greed? Well, I'll tell you, fear is a much stronger emotion. You will run for your life much quicker than you would, say, run to go make some money. So when you look at a market, they'll drop, the bottom will fall out on 2 to 3 times faster than they went up. That's what's in. Just go back and look at any market crash, and that's what's happened. It came back and retraced 3 times as fast as it took to get there. So those kind of things you got to be careful of. And I don't want to be involved in those kind of markets when it's doing this. And I have lots of my friends ask me right now, because they're trading these, whatever, the GameStops or the Bitcoins of the world. And I said, that's fine. It's total risk and speculation. I go, but what's your exit strategy? No different than a real estate syndication or investment. And I learned this a long time ago. And because I used to buy and sell lots of companies that I owned. When you buy something, everybody talks about they want to buy this, they want to buy that. There's also the exit strategy. You don't ever go into something without knowing how you're going to get out of it, what the exit strategy is. So you've got to keep that in mind. And I would say that on the markets also. So what's your exit strategy? Where's your line in the sand? When do you say enough's enough and I'm going to get out? You're never going to pick the top of a market to sell. You're never going to buy at the bottom. And that's in any market. I don't care if it's financial markets, real estate, whatever. That's just what, if you do, it's sure luck and you probably won't be able to do it again. So got to know the exit strategy on those kind of things. And I'd say that also in the real estate markets. Now, I don't think it's exit strategies in real estate markets right now. I think we have some good bullish moves to be able to make in the real estate, multifamily specifically going forward, because there is still, there's demand there, and it's driving cap rates down, but there are markets you can get involved in that the cap rates aren't astronomical, that you can make a lot of money. And I'm sorry, I sort of start rambling down these trails, and I'll take off down these other trails. It may not even have fully answered your original question, but that's just how these things lead themselves into. So
the currency markets are a big mystery to me. They always have been. I've never really studied them, never really looked into them. They've just been too intimidating for me. And I appreciate you going into that. I'm still in the dark, frankly, as to how these currency markets act and really how it is that they act and interact with interest rates and with cap rates. I've worked with interest rates and cap rates enough to know that, there is a relationship between interest rates and cap rates. And certainly as we've seen interest rates dipping further and further down, cap rates have done the same as purchase prices have increased. And many people I've talked to are saying the same thing, that those interest rates are probably going to stay low for at least 2 years, maybe up to 3 years or so. But many experienced real estate investors are saying that we can't keep artificially pumping up these markets, and that it's going to have to come down at some point in time or the other. Someone was telling me that there's something like 20 to 30% of small businesses that have closed their doors permanently. And at the same time that's happening, the stock market continues to escalate.
Makes no sense.
It makes absolutely no sense whatsoever. So there's got to be a correction there. So
you say that, and I would agree with you, but if you look at Japan as a country, the Bank of Japan has been artificially stimulating these markets for over 20 years. So it can go on a long time. So I think their objective is to keep the plate spinning as long as they can, because they don't like the alternative. Nobody likes pain, but it's a part of reality. And sooner or later, and I don't know when, but sooner or later, it's going to have a reversal and a cleansing, and it's not going to be pretty. But that's going to happen. It's definitely going to happen.
Tracy, you began real estate investing back in the 1980s, and you owned and operated over 500,000 square foot of industrial warehouse distribution facilities. To control these assets, you used a sell lease back strategy. So that I and our audience can understand, can you explain to us the basics of a sell lease back strategy and how you put that into place?
Sure. So when you think about, and this is industrial warehousing space, so it's a little bit different area than say multifamily, but yet it is income producing property. And it's just like everything else because it's income producing property. So what derives the income for that property? In my case, it was my company who rented the warehouse space. Now it was an operating company unto itself. It was a logistics company that warehoused and did distribution for like the 5-state region, Texas and surrounding states, for large Fortune 500 companies that didn't want to have to set up their own distribution systems. So we did it as a third-party logistics company. So it was more of a service type industry, yet we leased the space. It was my employees. We did all the order filling and shipping and all that kind of stuff. Now, that being said, originally I did not own the properties that I was leasing, but back then it was $25,000 a month for some of these properties. Some of them were just like 100,000 square foot warehouse. Well, that's a lot of money to pay in rent, but it's just a total expense. But if you look at what gives value to a building like that, well, it's the tenant. Of course, my objective as a business owner was to keep my rent as small as I could. That became a little bit more and more difficult. So it came to the point where I thought, well, why would I want to keep paying these high rents when I can go out and buy the building and probably lower my rent cost or my occupants costs to be able to be there? I so started looking into that. And then I realized, okay, if I find a building that's vacant, obviously it doesn't have a tenant, so you're going to buy it at a lot cheaper rate. If I bought the building and then moved my business in there, and now it's an income producing property, it has quote value to it. It's on cap rates and all that kind of stuff all flow right through to it. So now I've just created value to the real estate by moving my business in there. And so I bought the building vacant, moved the business in there, stabilize, and then sell the building. And I still leased it back though. So it's a sale lease back is what it was. And that way I made more money on the real estate than operating the business for quite a while. So that was the kind of thing. And I wanted to operate the business. It had a service and employed people. And I was able to draw small salaries out of it. But at the same time, it was a vehicle that just helped me with the real estate end of it. So that's where I started learning more about the real estate markets in general. Now that market changed and went away, and I kept the warehousing business for quite a while, then ended up selling it and then bought several of different companies, manufacturing and things like that. But the industrial warehouse was where I really learned about the income producing properties and how you make the money off of them.
Do you still invest in industrial warehouse?
I don't, but I'm looking at it. I'm looking strongly at it to see if there's that sale leaseback market again, because I still know a lot of people in the industry, and I'm talking millions of square feet, that you can go out and do the same thing on. You just got to be able to find the right property. And there's lots more components to it when you're talking about logistics and stuff. It has to be certain locations. Locations are more important, where you have apartments just about everywhere. And you really need, the industrial warehouses need to be in specific locations to really make it ideal. And there again, there's lots of more operating side statistics that go into it as far as making it. But I am definitely always looking at deals. I look at all types of, if it involves real estate, I'm looking at it in some form or fashion, all the way from farmland and vineyards to apartments and warehouses.
Well, there's a possibility that there actually could be a boom in the warehouse industrial side with online purchasing is increasing substantially.
Amazon is probably one of the biggest warehouse users in the world right now. They're putting up a lot of space for them.
And isn't the return on investment generally higher on industrial warehouse than it is on multifamily?
As far as the investors' return just the cash on cash and everything?
The cash on cash and the internal rate of return.
Yeah, it could be. What you've got to understand too, though, is you're a little bit more exposed from the risk standpoint. And I'm just saying a big industrial box like that, you're not as diversified. With an apartment complex, if you got 100, 200 units, well, you've got 100, 200 different diversifications in there. If you're just leasing a 250,000 square foot warehouse to one tenant, that's definitely a little more risk there. So you should definitely make a little more money because you're taking on more risk because of that.
Yeah, generally with higher returns, it's higher risk.
Exactly. It's always proportional. People don't understand and this goes on with the financial markets too. If you're making those kind of returns in the financial markets, you better watch out. There's risk there. You may not be aware of it, but it's there.
For sure. Tracy, you've been investing in real estate longer than probably many of our viewers and listeners have been alive. So along with real estate investing, you've worked in the global financial markets. You've got a unique perspective on all of those various different aspects of investing. So you've got valuable knowledge and expertise that can benefit others in many different ways. Though all of these experiences, you have learned that no man is an island, and you've been mentored and you have mentored. Can you illustrate for us how mentorship, both receiving and giving, has benefited you throughout the last 4 decades of your entrepreneurial experiences?
Sure, and I appreciate that question. Yeah, so I'll go back to pre-internet days, and I can do that because I'm on the backside of 40, as they say, way on the backside of 40. To give you an idea, when I got in the industrial warehousing business, I worked my way up to the ground floor, basically working in the warehouse and working my way up through management. But when it came time, I really wanted to buy the business. I didn't really, and I knew how to operate, obviously, some things, but there's things about the business aspect of it that I really didn't know a lot about. So back in the old days, when you just had read books about things, I found books on warehousing logistics, and I found books on buying and selling companies, and I bought these books and I read the books. And then I would reach out and track the person down who wrote the book and call them or get a hold of them, write them a letter or whatever I had to do before email. And this is the 80s and early 90s. And so I would send stuff to them and I'd say, hey, I read your book. I really appreciate it. I learned a lot. Could I fly to Chicago and buy your lunch? I'd like to just talk to you. And you'd be surprised that you think these people are up on a pedestal and don't want to be bothered. No, they love talking about what they're passionate about. And I never had a guy refuse me to yeah, I'd be glad to. Or he'd say, I'm going to be in town and yeah, I'll meet you before a conference. I'm going to a conference and I'll sit down and have lunch with you. So that's how I got mentored, was going to people who knew what they were doing. And I did that from there forward. And the warehousing business was probably the first one I did that on. It's my first business that I owned. And then I started going into other service companies and manufacturing. So I would find who I thought was the really knowledgeable person in that area. And I would track them down and have them educate me, because I didn't know a lot about any of the business I went into. I didn't understand maybe the specifics of that company, but all businesses are essentially the same. But I would find that person who really understood it. And that's the same thing I did in real estate. It's the same thing I've done in the financial markets. And then I turned into a mentor in the financial markets. I've taught a lot of people over the years how to trade the markets, or I've tried to. The financial markets are funny. You get so much emotional in there, and you got to set the emotional side, which is tough because we're emotional beings. But I try to mentor people in all areas. And the same thing I do right now. I've been mentored and I mentor other people in the real estate. And I have calls from people every day that either see me in a podcast or have seen something on Facebook or wherever it is, all the different social media outlets, and they'll email me or call me and say, hey, would you talk to me? I'll be glad to. And there's some very young entrepreneurs out there. I'm talking some of them less than 20 years old and a lot of them in their 20s. And I sit here and thought, the way I look at it, going, what I would give to have someone speak to me when I was in my 20s that just answer some questions and give me the time of day and say, hey, don't waste your time going down this road. You need some help here. And I help people any way I can. And like you say, no man's an island. That's something I figured out too, is a lot of my businesses, when I first had them, I didn't have partners. It was just me. As I've gotten more and more into other companies, I've had other partners. In real estate, I have a lot of partners on what I'm doing on that because it's a lot more scalable. But there you got to have a good team. You got to have the attorneys, accountants, insurance people, all those kind of things, mortgage brokers. Those are all part of your team that you have to have because you can't do it alone. And that being said, you better like the people you're dealing with, because if you're partnered with them, it's like being married. You better get along with them. And even then, sometimes it doesn't always work out so well. So yes, mentorship's a big part of everything I do.
Enlightened investors, are you passionate about the work of your calling but have little time to develop a passive investment portfolio to secure your future? Even though you are blessed to work in your calling, would you like to have financial freedom to live more abundantly in all areas of life? If this is you, visit us at steedtucker.com. There you'll find free information on predictable, reliable, and passive real estate investing so you can develop financial independence for abundant living. While there, you can schedule a 30-minute phone call to talk with me about anything you'd like, or if you'd rather, send me an email at alan@steedtucker.com. I look forward to meeting and connecting with you. Speaking of teams, Tracy, you brought up the aspect of teams. Can you share with us a little bit about, you mentioned all of the various different aspects of attorneys to appraisers to mortgage brokers and real estate brokers. For those who are interested in developing teams and investing in real estate, can you illustrate for us how you would really actually go about putting a team together if you have to start from scratch?
Use referrals. Don't just Google somebody's name. Definitely use a referral. That's what I did from my mentor in my real estate background. And he basically gave me all his contacts, his attorney, his accountant, all those people. And I've done the same thing. I've referred them on to people that I've mentored. So that's how I started putting it together, because real estate and like everything else, law is very specialized. You don't want a family practicing attorney to be your real estate attorney. It's just not very wise. And all the way down to even your accountant, believe it or not, there's some CPAs, they're not very well versed in real estate law and as far as deductions and stuff. Like cost segregation is a big example of that. There's a lot of accountants that really don't even understand it. And I'm not talking small one-person shops either. So those are the kind of things you do. So if you're going to put a team together, make sure they're referred to you by someone who's actually used them and they've actually done several deals and they have a track record, and more, and all the way down to real estate brokers too. Real estate brokers can make or break the deals too.
Exactly. And real estate brokers and accountants, just like you all mentioned, they vary tremendously from person to person. And in terms of scale levels, in terms of integrity, and in terms of dedication to what they do or don't do. Angela Duckworth is an author of the book Grit, The Power of Passion and Persistence. And through her extensive experience, she has discovered that grit trumps talent every time. We are all endowed with, from just the randomness of birth, with certain gifts and abilities. And often those talents and abilities go nowhere. So talent is something we're given. Grit is something that all of us can develop. So over your life, you have developed a personal philosophy of never ever quit. And you actually started developing that about 2 years old, and always keep moving forward. So from those 2-year-old experiences that you just shared with us at the beginning of the show, how did you develop the grit that keeps you going forward in all of these different various entrepreneurial experiences?
It's interesting because you can talk about having grit or having fortitude, but until you're tested, you really don't know. It's the same thing in the Marine Corps. Everybody thinks they know how they're going to react when they're under fire, but you never know. You would think that the big guy that was the star athlete in high school would be the guy that's going to rescue everybody, but that's not always the case. Sometimes it's the little bitty guy that was the nobody in high school is the hero. And so you don't know what you're going to do until you're faced with adversity. And I'm talking real adversity. I had a business mentor of mine who is quite a bit older, older generation than I am. He's passed on now, but he told me, he said, never trust a man that hasn't been broken. And I said, what do you mean? He said, he needs to be tested, because what you don't want to be, you don't want to be with him when it's the first time he's been tested under fire, I guess is what I'm saying, because you may not know how he's going to react. Because people, how they react under adversity when they've been really tested, that's what you're going to find out what they're made of. Can they really get up off the floor when they've been knocked down? Because you're going to get knocked down, and it could be devastating. It can be emotionally devastating. You can be in a very bad place in your life, and whether it's financial, it could be a health crisis. There's lots of things that can happen, and you got to figure out, okay, why am I going to get out? You got to be able to get out of bed every day, and what's going to motivate you to do that? And that's when you've got to reach down there and grab hold and to do it. And you never know until you've been through it. And so you wouldn't wish that on anybody, but if you're going to be in business with someone, I would like for them to have been tested and gone through that. It's like the thing with, you got to have quote the experience, got to have experience to do something. Well, because experience will keep you from making bad decisions. How do you get experience? Well, you get experience from making bad decisions, because then you're going to have to go through some of that stuff, and hopefully it's not catastrophic. And like I say, I wouldn't wish something on anybody to be broken or to go through catastrophic, but you got to be tested. You got to be forged in iron. You've got to be forged before you're going to be able to really go there. And I hate to say it, but a lot of young people just haven't been through that yet. And until they do, you're not going to really know how you perform. So it's life. It's part of life.
We hear from investment advisors all the time harping on the aspect of diversity, by which they generally mean by a variety of stocks in various different families. When you speak about diversification, you talk about multiple streams of income, which I suspect is a very different concept than what most financial advisors are talking about when they talk about diversification. So, can you talk to us about your concept of multiple streams of income?
Sure. And yeah, because the financial advisor's definition of diversification, it's still when the market goes, they all go down. It's just the tech stocks, everything's going to go down. And that's what happened the last time. You just got to look at the past examples. So that's really not being in the financial market is just one aspect of it. You need to be diversified out of that. So what do I call multiple streams of income? I would talk about passive income from the standpoint of a W-2 job. I haven't had a W-2 job in a long time, and there's pluses and minuses to that. If you have a W-2 job, well, also you need to be a passive investor in real estate. So you have income working for you because as Warren Buffett, I think he said, until your money's working for you when you're sleeping, you're always going to be broke. So if you have to work for the rest of your life, you can only work so many hours a day. So your money needs to be working for you, whether that's in the financial markets, whether it's in real estate, whether it's in owning a business or investing in a business. It doesn't mean you have to own all that, but you need to be invested in those things to have those multiple streams of income. So that's what I've taught all my kids. It's one of those things where if you have a passion to teach, then teach. If you have a passion to be a lawyer, then be a lawyer or a doctor, or whatever that is, or fireman or law enforcement, whatever it is, they're all admirable things to do. Does that mean it's going to pay you the kind of money for the lifestyle you want to leave? Maybe not. But what you can do is you can learn how to be a passive investor and actively investing in things to help generate other income, not just for your retirement age, but to help supplement income right now to lead the kind of life you want to lead. And if you teach kids how to do that young, and that's what I've been harping on, it's what I've taught my kids at a young age is do what you want to do, and I'll teach you how to invest your money to make other money. So you'll have the income to be able to do that, whatever that passion is you have. Maybe it's totally volunteer and you don't get paid. But hey, wouldn't that be great to be able to have the income to be able to do what you want to do and not be a drain on anything else as far as to support yourself and be able to give back. So yeah, multiple streams of income. I own parts of businesses, like I say, I own real estate, and they're all income stuff. And not just multifamily real estate. There's some other areas of real estate, like I said, I'm getting involved in. Some of it's farmland and development, vineyard development. Just I'm open to everything as far as if it's investment income. And some of it's, say, a little bit more risky. Some of it's a little bit more development kind of stuff. But at the same time, it's going out there to where it's not all going to get hit once. It's just like the world we're in. If real estate crashes and burns, I don't think commodities and agricultural stuff will crash and burn because we're always going to need that also. It's the next. You got to have shelter, you got to have food, you got to have water. So those are the things that really matter, especially that's what I think people are realizing in Texas in this last couple of weeks. What we've been through down here, I don't think people realize how close they were to being desperate, a week away from being very desperate. Is what I told my kids, princess, you need to be prepared if this goes on. People will be tearing wood off of personal property to be able to just heat their homes and keep themselves from perishing because of the cold. Who would have thought in this day and age that would be an issue to even deal with here? And the same thing with food, when there's no food on the shelves or water to drink. You think about those kind of things. It makes people really think, okay, maybe we need to start preparing a little bit better for just things we have in front of us. So there you go. I went down a bunny trail right then. That wasn't even what you asked me the question about as far as diversification. But it does. You need to take care of yourself.
What I understand you saying is that diversification comes in multiple ways, not just in the stock market, and that the more that you can diversify, not just in one type of real estate, but in multiple categories of real estate, from multifamily to perhaps industrial to even perhaps retail, hotel, all of those various different aspects, and also in farmland and vineyards. The more you can diversify, the more you're going to be sheltered when the crashes come, which they always do.
Yes.
Before we take our deep dive, the portion of the show where we go deeper into your personal life as opposed to your entrepreneurial life, what last words of advice and connection points would you like to share with our audience today?
I would say get up out of your chair and do something, because people talk. You got to do. And so I would say take action, which is it's a big common word that you hear nowadays, but you really got to do it. Make the phone call. I think that person's willing to talk to me. You'd be surprised. If they won't, then hey, call someone who will. But make those calls and just take some action is what the biggest thing I would say.
Well, let's move into our deep dive. Share with us one of your most difficult setbacks and how did you come through that time and what did you learn from that setback and that disappointment?
Okay, this was after I started trading the markets because I remember I already went through a bankruptcy, so that was pretty tough. It was real tough. We lost everything, and I say this just to put in perspective, and not that I would do it all again. I obviously made some mistakes, but we had all the toys and stuff that you could want that comes with wealth, but we lost that all. We lost the house on the golf course, and it sounds obscene, so I'm not going to tell you the things that we lost because they're just stuff anyway. It is just stuff. And so what it comes down to, at that point in my life, now I had 4 children, and they were still very young at that point. One of the biggest concerns I had when that happened and we started losing everything was that they would look at their father as a failure. That was my concern. It wasn't theirs. And I apologize because even this was 23 years ago, it still touches me tough. So my kids didn't care about private school, living in the big house, country club. They didn't care about all that stuff. They just want to know, are we going to be together as a family? That's all they cared about. And that included the dog. So they want to make sure that okay, fine, we're going to move out of the big house and move into a little bitty place and we're all going to be bunked up and everything like that. But hey, we're going to be together. That's all they really cared about. So that was a really tough time to get through. But I had my family there around me. You will find out real quick who your friends are once you lose something like that, because it's almost like they think you have a contagious disease, and if they get too close to you, they might catch it. And I think what it does is it reminds them that they may be vulnerable too. And I cautioned a lot of my friends that had a lot of debt after I went through. And of course, I became a very pipes of debt after that. And I would say it concerns me. I know how you run your business stuff, and you're exposed to this, and they don't want to hear that at the time. So you find out who your friends are. So it can be tough. So you really got to lean on you. My wife's been obviously a great supporter of this, and it's very tough from her perspective. You interviewed her, you can imagine how tough it is to see your spouse go through that, but yet not really be able to physically do anything to help them through this time, because it's not her responsibility. It was mine. She had her hands full taking care of these kids and getting them raised and being the 120% of the time. That was tough. Now, we got through that, but as we went through it later and I started trading the markets, I had a little great success very quickly, but I didn't have a lot of money because remember I was starting over. So at that point in time, I actually was funded by another guy that had heard I was trading, and I'd been trading for 2 or 3 years by then. Said, hey, why don't I fund what you're going to do here, and we can split the profits, and this can work out pretty well. And I said, that'd be great. So we did that. We partnered up for a while, and I was on the verge of making 7 figures on some trades. And you got to remember, I was coming out of losing everything, and we are just basically trying to get by at that point in time. And people say, go, Tracy, why didn't you go get a job and feed your family? I would love to have done that, but you know what? It's tough getting a job, a W-2 job, if you're an entrepreneur, because they don't want to hire you because they're going to think you're going to come in here, figure out my business, steal them, and on it. So it's harder than you think. Hey, I would have done anything just to feed my family. And I did some things like that just to do that. I remember I was driving a forklift in my 40s because that's the job I could get to put my food on the table. So I've done those kind of things. I don't want you to think I went bankrupt, came out of it, and just made a bunch of money again. That's not how it all worked. But going through the trading thing, so I was on the verge of making a lot of money, and I listened to the guy that I was partnering with from the money standpoint and listened to him as far as the trading part. And he didn't know a thing about trading. He was just putting up the money. But because we were up massively on these trades and they were open trades, not closed, I said, we need to close these out. We're going to end up paying taxes on these. We should go ahead and close them out. He goes, why would we do that? It's going up. We can make a whole lot more money. The greed kicked in on him. And I sat there and thought, well, it's his money. So I guess we'll just let it ride. We let it ride to just almost nothing. And we lost it all. And not all of it, but all the profits. And there I am 3 years later after the bankruptcy, and here I'm starting over again pretty much. Now, that was probably the lowest part of my life. And I will tell you, that's when I had to really reach down and figure out, okay, who am I and what am I doing? And do I even know what I'm doing? Because I listened to someone I shouldn't have, and it caused me to put my family at risk again. And I was really irritated with myself for doing it and on. And my wife got tired of watching me sit around moping every day. You never get dressed and you're sitting there. But I didn't want to trade at the time because I didn't think I could do it. I didn't know I really beat myself up. And she sat on the couch and she said, "What are you doing?" I go, "What do you mean, for the rest of the day? You want some air?" And he goes, "No, with your life. What are you doing?" And I go, I started the old pity party thing. She goes, "Stop." She goes, "This is not who you are." And he goes, "And to be honest with you, it's not very attractive. So you just need to get up off the couch and go back to doing whatever you got to do." So she basically slapped me across, and didn't physically, but slapped me across the face and got me back in touch with reality and said, "Hey, you need to get going and be who you are. I know who you are. Go be that person." And hey, there she did. She saved me from the abyss, as I would say. So that would be the lowest point.
And what is your big takeaway from that lowest moment?
You need someone to rescue you, come on beside you when you're not in a mental state to be able to do it. And so that's when you cannot, that's back to that can't be an island. You got to have people around you that can recognize it, number one, and go in there to support you. Doesn't mean you have to have all the answers and all the words, but you got to be there. You got to be there for them and know that it'll get better.
People who have never been to the depths like that, I don't think they really understand how challenging it is to turn that around and get out of those depths. Even if you cognitively you have the capacity to do it, those feelings of shame and doubt and weigh so heavily upon you that it's difficult to do it. So yes, we do need those support people, and they're hard to find. They really
are.
And when you find them, they're precious people to have in your life, truly are. So today, what in your life do you feel most grateful for?
That's unequivocally be my family. Is definitely starting with my wife. She's first, and then my precious children. So it's my why am I here on earth is to raise godly children and raise them up what I felt was the best I could, and make them to be the kind of people that society needs and wants around them, and for them to go out there and do the same thing. And I feel like I've accomplished that. I've got 4 successful adult children that make everything is really great. And I'm very fortunate to have this in my family and my wife. She doesn't come from that from her side of the family. It's all estranged and everything. So it just makes me value that much.
Looking back on the last 24 hours, what are 3 good things that have happened to you today?
I put a contract in on a ranch that I'm buying. And so I'm excited about that. I am closing in on finishing up the raise on a property we're closing on Monday. Pretty good sized property up in Lubbock, Texas, and found another deal that I'm looking at that just came across my desk this morning. So it's been a very productive week.
Wonderful. Congratulations. How are you putting your success as an entrepreneur and investor to work to make the world a better place?
We've done this a while, and I started toying this idea back when I was trading the markets, was to set up not necessarily endowment, but more of a nonprofit company to take investments. Because back when you have money, people come to you wanting you to give to charitable organizations stuff, and I have that a lot, and I do that. But most of them don't want the exam I'm going to give them. They want my money. And it's not because I call it, my money. No, I just think I need to be a good steward of that. And there needs to be a good return on the investment for who they're going to give the money to. Because here's what I know from my past experience of being on boards, a lot of charitable organizations, on some private schools. They're in a constant fundraising mode, constantly. And that's what they spend all their hours. They have usually one big event a year. And then the rest of the year is spent organizing the event for the next year. And they wear all their volunteers out doing that kind of stuff. And it's just to scrape by. And I thought, this is so ridiculous. Why don't we sit here and get some people with money to fund something, call it whatever you want, a vehicle to take that money and invest it so they can have a return, so they don't have to worry about spending all their efforts in raising money. It could be self-funded pretty quickly if they're investing in the right things. But people have to have their heart in the right place to do that. I know that and the reason I ask if people want me to give money, I want to look at their books. I want to know what you're paying your people. There's so many charitable organizations out there are nothing but they're charitable, and that they're basically just a bunch of places for people to work, and they make really good money doing it. And very little goes to the end cause. So my thought was, okay, if you're going to be on the board, there's no paid position here. It's all volunteer. And basically our job is to bring the money in, and the whole job is to give it all away. So that is the objective. So that's what my goal in going forward to, and that's obviously something you can't do by yourself, but I'm working with businessmen that are like-minded to do those kind of things. And so that's would be my give back. I would get a lot of satisfaction out of that.
When you leave this world, what do you want your epitaph to be?
He tried, but I'm not a perfect. I've got lots of flaws, and I have a family that was able to point those out. That's the great thing about it. Your kids can be, because here's an interesting thing. My kids also worked with me. One of my daughters is actually partners with me on a lot of my real estate stuff, but I've owned a business where all my adult children were employees of the company too at one time. So we've all worked together as a family. So they're really good as far as pointing out what we need to do. And because here I am dad, so I thought dad made all the decisions, and they're interesting because they say, well, you can do all that, dad, but you're wrong. You're wrong. And so I said, you wouldn't say that to me if I was just your employer. You feel free to speak to your dad about that. But the thing is, of course, my wife coming behind and goes, Tracy, there. Okay. Yeah. Okay. Take the ego hat off. Yeah. And need to be sure that I could take advice. And I fail at this every day, but I would say to be a little bit more tenderhearted. My wife told me at one time, she said, I want to go out to San Diego, California and go visit the Marine Corps recruit depot where you went to boot camp. I said, why is it? She said, well, somewhere out there in a warehouse is your compassion and your empathy for other people because they stole it from you. She said I was a different person when I came back. And so I had a little bit of a hardened exterior because of that. What they put you through is just part of the training, and you got to have a lot of that. So that what I would say, I need to work on that part of it because what I don't want on my tombstone is here's the saying, you can always tell a Marine, just can't tell him much. I don't want to be that bullheaded person. I want to be open. Something that will soften your heart will be grandkids. And I've got some of those, and so that's helped too. So I guess, what your question is, I never really thought about it. I said he was a good father and a good husband, and he had honorable character. That's what I like.
Tracy, it has been a pleasure having you on the show, and it has been tremendous value for our listeners. So thank you for being with us today.
Alan, thank you so much. I appreciate it.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our effort to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.